What's going on, everyone? And welcome to another episode of my weekly reviews on the Modern Day Trader channel. So, exams are finally done, guys. Done and dusted. I think how fitting that it aligns so nicely with the end of the quarter and a point of the year where you can look back and close this chapter, this first quarter. The main goals, the main intentions were to, successfully prepare and write for my exams. And I really feel like that's playing out really nicely. And I think the reason I'm so excited about this next quarter and what's to come is because freed up a lot of energy, a lot of focus, a lot of time that was being directed towards studies to what I guess my next objective is now, which is dialing in on my trading, the craft, focusing on the prop firm challenge now fully with maximum focus and how to achieve that goal, yes, as quick as possible or as efficiently as possible. And building the Modern Day Trading channel, I think it's been such an amazing sort of like creative outlet, and we've gotten pretty comfortable on YouTube. I think there's been a lot of consistency there with posts that we put up every single week and just showing up and almost getting through that proof of concept phase. And a lot of, I guess, the potential of that creative outlet has almost been toned down on my end because a lot of my focus has been on preparing for my exam ads. Now I'm in a position, I guess, going forward where I can focus on this a lot more. And I think a big part of that is becoming more active or posting more or engaging more on Instagram. Instagram for me is a lot more personal. A lot of friends on here, colleagues on here, but it's really been my personal journey. And I guess I've developed a much better following here on Instagram than on YouTube, where we're very new to the platform. So it feels like it opens up a lot more room to sharing my passions and the journey and I guess everything we're working towards. Part of it is really exciting though, because I'll then get to share a lot more detail with in terms of what my plan is for the second quarter. There's a video, or I wanted to shoot myself going really deep into my trading plan and how I approach the market, because I do believe that clarity precedes mastery, and I feel that there is an extra layer of depth that can be achieved in my own trading plan, and I think sharing that with you guys will help me understand and interpret it a lot better, which I'm hypothesizing translates into better results, passing phase 1 and 2 of the current hot film challenge that I'm busy with, and then continuing on to consistent withdrawals. For now though, it is the end of the quarter, and there's no better time to sort of recap on the quarter, how we did. In total, took 15 trades. 7 of those were winners, 7 were losses, and 1 was straight even. So that translates into a strike or win break-even rates of about 53%. My maximum return throughout those 15 trades year to date was 0.68%, 0.63%, sorry. My max drawdown on the account was 0.26%, so about 0.25%, and my actual return year to date is 0.58%. So I don't think I've done a terrible job in terms of executing on the plan and following through on the plan and continuing to forward test phase 6 of my current plan. And I'm happy with, I think, the capital that was preserved this isn't, a crazy result. I'm up on quarter positive, but it's nothing to write home about. But in the same breath, capital was preserved, and over 15 trades managed to get a strike rate of like 53%, and it ended me in the positive, which was nothing to, I think, tone down as well. So some interesting data that's come out of this plan or the set of results is my most traded pair was EURUSD. 7 out of the 15 trades that I executed came from EURUSD. 4 of those 7 trades were winners. So majority of my winners was coming from EURUSD. The majority of my losers were spread out between EURUSD and USD ZAR. So a bit even there. All my trades were continuation positions, which means that I was trading in alignment with the 4-hour time frame. And I guess what this is telling me, or a tweak that I'm getting, is that I'm not really diversifying my risk across corrective 4-hour moves. So where the POI hadn't been mitigated yet and price is correcting towards that POI to continue in the direction of 4-hour structure. And my plan does have a set of confluences that I stack to then determine whether that's the position that I want to execute. So I do account for it in the plan. It may be that those positions, just didn't present themselves over the quarter, but I may have just missed them for whatever reason. So only 2 of my positions were taken during the London session. So that's the majority of my positions taken in New York, majority of wins in New York, majority of losses in New York. So no sort of real significant benefit, I guess, that I feel I'm realizing. It just means that, a lot of my positions are concentrated in a certain time. And that, again, leaves me questioning whether not diversifying my risk across or into that London session, or I'm not leveraging the volume that comes from London session. And I guess right now, I don't know whether that's good or bad, because I don't have any data to determine, whether it is or not. So yeah, I guess something to just look at, incorporate going forward. I may find that adding more of those improves my results, and so I should be looking for more of those. I may find that it, lowers my results in my return. I take more losses from those kind of positions. So again, I'll never know until I, start to implement those into my data set. And yeah, I guess what's exciting is how I will translate all this data and all these insights and these tweaks into my trading plan is what I want to bring to you in that video that I alluded to, of kind of just going deeper into my trading plan. Actively now taking the data from my results and putting it into my revised plans. I revise the trading plan every 20 trades, because I guess from the book I read in Mark Douglas's Trading in the Zone, that's the threshold he feels where you have gotten enough data to make an informed decision on the performance of your plan, but it's also not too many trades where you are now running the risk of losing too much on strategy that isn't working. So it balances that quite actually. And yeah, that is all for today. Thank you guys for tuning into this weekly review. Just touching base post-exam, I've definitely slowed down. And so, yeah, not much to report to on the charts this week, but at the end of the quarter, wait through some of that data and those results. and looking forward to sharing with you guys from next week what the plan is for the quarter, and then just over the second quarter, focusing a lot more on creating content for the Modern Day Trader channel, and I guess just engaging on different platforms and how I'm looking to do that. LinkedIn is an example of a platform that we're trying to create more content for, but it's going to be different to Instagram and YouTube. So getting into the nuances of this whole content creation journey, because it is quite difficult and a lot of work and a lot of time, and respect to the people who have been creating content and the pioneers in space, because it's difficult, but very enjoyable. And guys, don't forget, consistency is the choice you make when you start doing the things you should be doing day in and day out.